This is CRE Radio and TV. I'm your host, Howard Klein. Today we're going to ask the question, will the Fed's failure to raise interest rates affect commercial real estate? Part 1, with our special guest, Dr. Sam Chandan, professor and associated faculty of real estate at the Wharton School and host of Real Estate Hour, SiriusXM Business Radio. We'll be right back. This show is brought to you by The Broker List, the CRE community's first free online platform for finding brokers, deals, services, and vendors. And Leverage PR, the PR firm for your CRE firm. Publicity to grow your business. What's going on with the Fed rate and how that's going to affect commercial real estate?
Sure, and I think when thinking about how a prospective increase in the interest rate may impact commercial real estate, I should preface any conversation by saying that, in my view, and I think in the view of many economists, the Fed's policy to date has already had an impact on commercial real estate. We've had very, very low-cost capital for some time now, and whereas in 2008 or 2009, we really were in an economy that was characterized by crisis conditions. And at that time, as you might expect, given a set of crisis conditions, a crisis response from the Federal Reserve was seen as quite appropriate. At this point in time, we still have interventions by the Fed that are, we can characterize as crisis-type interventions, but we no longer have those underlying crisis conditions in place. And that in itself presents a potential problem. So we have very, very low costs of capital, at the same time as investors' appetite for risk is slowly but surely improving. And that has meant that capital has flowed into commercial real estate, into other asset classes, in a way that has exerted some upward pressure on prices. And it doesn't matter really whether we perceive this in terms of lower cap rates, narrowing spreads, whether we see this in terms of the hunt for yield. The fact that capital has been so very low cost, that high yielding opportunities have been so rare, certainly has had some impact on driving up the value of commercial real estate. When we look then at what could happen in the near term, I think earlier in the summer there was certainly some expectation that we would see that first rate increase in September, and then August proved to be an unusually volatile month. August is very often a volatile month, but when you look at some of the external forces at play, when you look at the degree of volatility in China, when you look at some of the real drags on economic activity in Europe, when you look at Canada, our nearest neighbor, slipping into at least temporarily a recession. All of those things collectively, combined with then pressure from the European Central Bank, the IMF, the World Bank, either on the record or behind the scenes, really pressuring the Fed, not to move forward with a rate increase in September. That's been delayed, and now the speculation is that it will very likely occur either October or in December. For most of us, given our relatively long-term investment strategies in commercial real estate, is not going to be material. That in itself doesn't make a difference. I don't think any of our long-term investment objectives depend on whether the Fed raises rates today or a couple of months from now. That being said, if we're investors in the market today, certainly the way in which we time our borrowing decisions, might be impacted by our desire to, minimize our long-term borrowing costs. And there, it can make a difference. And where I think ultimately, the Fed's decision about kicking off a round of rate increases impacts that longer-term rate and can have a more immediate impact, even though the Fed is raising, again, that very, very short-term rate, is that it does signal to the market. We are finally at the beginning of a period over which rates will be trending up. We've many of us not believed that we would eventually reach that inflection point, but it's here. And so although the increase is only in that short-term rate, to the extent that it changes people's expectations around what will now happen over the course of the next 6 months, 12 months, over the next 2 years, it has an impact almost immediately on those longer-term rates as well. So we start to see that, prevailing rates in the market, on a longer term basis, the 5-year Treasury, the 10-year Treasury, those rates begin to trend a little bit higher as well. And that's where I think we start to see some headwinds on the value of commercial real estate.
This show is brought to you by The Broker List, the CRE community's first free online platform for finding brokers, deals, services, and vendors. And Leverage PR, the PR firm for your CRE firm. Publicity to grow your business. If you're interested in becoming a sponsor and having your logo behind me for thousands of people to see, contact me at sponsor@creradio.com or click on the highlighted link.